Let's look at the top 5 things you need to look for when picking dividend stocks. Number 5, dividend yield. Dividend yield is important when picking dividend stocks, but what exactly is it? In short, it's a metric that shows how much income you're getting from your investment. Dividend yield is the company's current annual dividend payment divided by the current share price. A higher dividend yield means you're getting more bang for your buck, so to speak. But there's a catch. A high dividend yield that's too high can actually be a red flag. It might mean that the dividend won't be increased in the future, or even worse, that it could be reduced. So when you're looking at dividend yields, aim for something in the middle, between 3 and 5%. That way you'll know you're getting a good return on your investment without taking too much of a risk. Number 4, historical dividend growth. Investing in dividend-paying stocks can be a great way to generate income, but it's important to choose wisely. One thing you need to look for is historical dividend growth. This refers to the rate at which a company's dividends have increased over time. Ideally, you'll want to find stocks with annual dividend growth rates of between 5 and 8%. If the current dividend yield is on the lower end, you may want a higher dividend growth rate. Historical dividend growth is important because it gives you a better chance of earning a higher return on your investment in the future. Dividend growth rates can vary widely from one stock to the next, so it's important to do your research before investing. With a little effort, you can find the perfect dividend stock for your portfolio. Number 3, look at the number of years of consecutive dividend increases. One of the most important things to look for is the number of years of consecutive dividend increases. A long track record of dividend growth is usually a good sign that the company is doing well and is committed to continuing to pay its shareholders. Of course, past performance is no guarantee of future results, but it's still something to look for. Ideally, you want to find companies with at least 10 years of annual dividend growth. That way you can feel pretty confident that they're likely to continue growing their dividends in the future. Number 2, check out the company's dividend policy. When it comes to dividend stocks, one of the most important things to look for is a company's dividend policy. This policy can give you a good idea of what future dividend growth may be like, and if the policy is clearly stated, it's more likely that the company will honor it. So if you're looking for dividend stocks, be sure to check out the company's dividend policy. It could make all the difference in your investment. Before I move on to number 1, make sure you subscribe and click the bell. That way you'll be the first to see my next money-making video. Number 1, look at debt-to-equity ratio. One thing you need to look for when picking dividend stocks is the debt-to-equity ratio. A large amount of debt can jeopardize consistent dividend payments during difficult economic times. So look for a debt-to-equity ratio of 1 or less. This will give you a much better chance of weathering any storms that come your way. Click the video on the screen to see another money-making video.